Tesla stock was hit with a double downgrade today. Not just single the fun, you gotta double the fun. These analysts are fucking clueless. Ladies and gentlemen, we're gonna get into everything happening in the markets today. We're gonna talk about Tesla's option flow, where the stock is going next, and this double downgrade. So, if that sounds like something you are interested in, hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you want to take it a step further and support monetarily, there is a link in the description of this video to sign up for Webull. You will get yourself up to 15 free stocks. I believe each of them around $5. Around $100 is what you could at the very minimum make. It's free money. You might as well do it if you have not done so already. So, let's get into it with this downgrade. First things first. Analyst Matthias Volker double downgraded Tesla to a sell from a buy. This is a double downgrade. He skipped over the hold rating. This is pretty rare on Wall Street, and this is usually a negative sign if a company gets double downgraded. Now, he maintained his price target at $210 per share and did not provide any details or reasoning why he double downgraded the stock. You can imagine it's probably because he feels the stock has rallied quickly and maybe the stock's going to take a little bit of a breather. The best conclusion that I can make from now 3 downgrades from 3 different analysts over the past 2 days or so now is these analysts are clueless. They have no idea how Tesla works or how companies or the real economy works. Let's face it. Analysts are wrong more than they are right by a long shot. You are better off flipping a coin than listening to an analyst. That's because they just don't understand companies. They don't understand business. They don't understand, ultimately, Wall Street. You are not them. You are a retail investor. You get to watch videos such as these. We have been right so far with this Tesla rally, and don't hold me to it. I'm not a financial advisor, but I believe it's pretty clear what's coming next for Tesla, and that is a continued upside rally. This is for multiple reasons, one of them being Tesla stock should have never been at $100 in the first place. If you look at some of your other big tech names, they have massively outperformed Tesla, meaning that those big tech names, be it an Apple, is at a new all-time high today. For why? I mean, the world doesn't look like it's in a good spot, economically speaking. Markets are freaking out today because it looks like Europe as a whole is very close to a recession. And we'll talk about that here in just a minute. But why is there this huge divergence where Tesla is still down a lot from its all-time high and other big tech names are at their all-time highs? That's one reason. Recent partnerships and announcements, potential investments in India, things of that nature, also make me very bullish. Advertising makes me also very bullish over the next 3 to 6 months. That's not going to happen tomorrow, but 3 to 6 months from now, we might be talking about advertising and Tesla's order books that are exploding based off of advertising. So just a couple factors right there. There's obviously more of them, like Morgan Stanley does expect Tesla is going to create its own financing arm to finance their vehicles, to get more people into Teslas. Analysts aren't even considering that when they go ahead and downgrade the stock, a double downgrade at that. None of these things were considered by analysts, and they are happening right now. So long story short, when you see analysts downgrading Tesla, you got to keep in mind, sure, the stock could trade sideways for a while. It could trade down a little bit. That's what you want to see happen, believe it or not, for a continued rally. They're not going to be right. So you kind of want to disregard it. I think a lot of people do disregard what these analysts say, but you really have to take it with a huge grain of salt. After all, Tesla stock is rallying from the lows that we seen earlier in the day today. Tesla stock itself doesn't even care about downgrades. Now, the RSI is reset quite a bit. That's a very good sign. You went from overbought to not nearly as overbought. RSI almost back to a normal range under 70. And the stock really is traded sideways over the past couple of days. You've seen a little downside from the highs, but relatively speaking, it's still close to those highs of this rally, of this cycle. But what's also happening today is a golden cross. Now, a golden cross is one of the most well-known bullish signs for a company, for a stock. It's when a short-term moving average crosses above a longer-term moving average. Specifically, the 50 or the 100-day moving average crossing above the 200-day moving average is the most well-recognized golden cross that you can see. There's shorter-term golden crosses, right? You could look at the 20-day moving average crossing above the 50-day, or you could look at the 5-day moving average crossing above the 10-day moving average. All of them are good signs when a shorter-term moving average crosses above a longer-term moving average. But you're getting the best golden cross of all happening today. The 50-day moving average, as represented with this purple line, has now crossed above the 200-day moving average. And that just happened today. It looks like the 100-day moving average is also about to cross above the 200-day moving average. But do you even think this analyst considered the golden cross when he double downgraded Tesla? No. Now, when I do my analysis on companies such as Tesla, I like to look at the option flows, especially when a stock is going higher. And what you've seen with Tesla is consistently bullish option flows. When these option flows switch to being more bearish, that's when you gotta kind of turn your head a little bit and try to figure out why. That's usually a negative sign. Vice versa, when option flows are bullish, that tends to be a very bullish sign for a continued rally. And what's happening today? Well, you have seen 813 orders placed on Tesla. These are hedge fund and institutional orders. This is the interesting and unusual flow sentiment. Worth $136.6 million with a positive order value of 65%. And if you actually dive deeper into some of these option flows, a lot of them are still those deep out the money calls. This looks like hedge funds are positioning for that rally. Some of them are targeting potentially all-time highs or close to all-time highs by July 21st expiration and by August 18th expiration of this year. Some of these options are still targeting over $700 per share by mid-2024. This would be because the business itself improves, margins improve with Tesla, as I expect they will. Now, the biggest catalyst in the near term is going to be July 2nd. And I've been pretty clear on this channel what I expect. I expect some sideways trading action, a little bit of downside, a little bit of upside, volatility to hit Tesla stock. But what has been the main thesis of that? You want to see the RSI come down. That gives you room to continue higher in this cycle without this oversold factor working against you. And that is exactly what has happened so far. So I really think from now until July 2nd, the last week, really before July 2nd, you're going to get a lot of short sellers that opt to cover on some of their short positions before that big catalyst on July 2nd. I think that gives you upside to that 300 to 315 level. If Tesla comes out with better than expected delivery numbers, that's where Tesla stock really rockets higher from there. Now, what are the shorts doing? And what does the short position look like currently in Tesla? Short sellers are currently down over $13 billion in their short positions. The dollar amount of these short positions is $23.8 billion. Out of the whole entire markets, Tesla shorts have lost over 15% of the total amount that they have lost within the last 6 months or so, within the start of 2023. So Tesla is a big problem for the shorts, and that is because everyone was wrong. The fact that Tesla traded down to $100 per share never materialized. You never seen demand destruction. You never seen Elon leave Tesla, as some people were speculating he would. You never seen more selling of Tesla stock after Elon said he was done. You've never seen these bearish things actually materialize. So short sellers, they held on to their short positions. Up until this point, shorts have not covered on their short positions. And I think that will be a big factor to drive the stock higher here in the shorter term. Now, the biggest risk to Tesla's rally is not Tesla itself, but the broad markets. The markets have rallied aggressively in 2023, driven by technology. For the most part, the Magnificent Seven have really carried this market. Stocks are down today. Stocks have fallen the last couple of days. And today you're getting a little bit more fear from Europe. And this could be a problem for markets. European business activity slowed in June as higher interest rates begin to bite. And S&P Global's Chris Williamson described the numbers as, quote, worrying as the Eurozone's flash composite PMI dropped to 50.3 in June. Germany, Europe's largest economy, is also in a recession already, and France looks to be right behind them, not to mention some of the smaller, weaker economies in Europe. They're certainly heading for a recession as well. And this is a problem for some of your largest companies in the world, specifically in Apple. They are on the chopping block here. Apple's revenue by region is very dependent on Europe and China. European revenue is 25% of Apple's business. China revenue is almost 20%. And America, Canada, South America, is around 40% of Apple's revenue. And you can see as this light blue line right here, this bar chart, America's revenue has been declining for Apple the last 4 quarters now. If China continues to decline and Europe starts to decline, you could have some pretty bad numbers coming from companies such as Apple and your global companies. This could cause fear about a potential further deepening of economic activity for America as well. Considering the markets have rallied so aggressively, that could be a problem for stocks that are trying to break out, such as Tesla. Now, considering you're only expecting about 30% growth next year in 2024 for Tesla, I don't think you're going to be as negatively affected based off of a potential global slowdown. Tesla as a brand is not very penetrated in the world. Tesla sells far fewer vehicles per year than a Toyota, a GM, a Ford, your legacy automaker. So I think Tesla has a little bit of cushion here, not to mention all of these initiatives that we talk about here in all of these videos. Tesla might be a little more insulated with a potential downdraft in the global economy, but that is still a threat in the next 6 months or so that you need to be on the lookout for if that narrative starts to materialize, as it could affect this rally. But again, in the short term, I really don't see much that can stop Tesla. Again, what did you see today? Even this double downgrade, you got this little gap down in pre-market. You kind of traded in this range. You sold off in the beginning of trading. You hit a low of $252.80 per share, around that $250 level. And what happened? The stock bounced and it's back to $261. You literally cannot stop Tesla. I don't care what happens from here. You want to see some sideways trading action? Sure. Some volatility? Sure. RSI has reset and now you're getting a golden cross. Tesla stock is going to fucking rip from here. That's the bottom line to it. Whether you like it or hate it, as long as we don't get a black swan event in the markets, something we don't see coming, Tesla stock is going to rally from here. You're going to see a short squeeze. People are under allocated to a Tesla. As you can see, Tesla stock is not even to where it was in August of 2022. Relatively speaking, other stocks, your big tech stocks that are growing a lot slower than Tesla, that have higher PEG ratios than Tesla, that is price to earnings divided by growth rate, I mean, they're much higher. Why is Tesla not? There's a lot of catching up to do. This rally has legs and will continue higher. Could break all-time highs by the end of this year. That's what I expect to see happen. So, again, none of this is a recommendation. I could be wrong. There is a possibility of that. We've been spot on so far. I doubt we'll be off by a lot. Let me know what you guys think about this down below in the comment section. Hit the like button, subscribe to the channel, especially if you made it to the end of this video. And congratulations for being in the markets, for being in Tesla. You are ahead of your peers by a long shot. And you will be rewarded righteously for just that. If you guys want to support the channel monetarily, as well as come join a trading community where I send out all of my trades that I make on Tesla or any other stocks, well, link down below in the description for that one, as well as the link for Webull. Like I said, if you have not signed up for that, that is free money. Go ahead, sign up. You literally cannot go wrong. You cannot lose. It's a win-win proposition for everyone involved. You guys have a great rest of your day, and I will see you in the next one.